Okay, of course, it is all about reporting season at the moment. Let's get into it. And kicking it off in the BNPL space, Afterpay, full year losses blowing out almost eightfold as it doubles marketing spend to tap into new markets. Revenue, though, surging 80%, closing in on the $1 billion mark. The $160 million loss is almost double what analysts had expected. Total customers are up more than 60% to more than 16 million, with total active merchants climbing 77%.
Obviously operating in a competitively charged world since the very beginning. Our top line margins have remained pretty firm. And when you look at our net margins, they've also stayed pretty firm by the innovations that we've brought to bear. It's not just about a transaction engine is the other point that I'd make here. And I know we've been saying it for some time, but I think our results today, but importantly, what we've talked about in terms of the way our ecosystem is developing, illustrates the point. So as an example, we've on average provided 1 million leads a day to our retail network globally. That's a really significant amount of connection points for retailers that impact their top line and their bottom line.
Okay, so that's the latest from Afterpay. Their total customers up 60% to more than 16 million. Underlying sales nearly doubling on a year earlier, with US overtaking Afterpay's home country of Australia become its biggest market. This all ahead of the near $30 billion buyout by Square, with the deal expected to close in the first quarter of 2022. And speaking to ausbiz, co-founder and chief executive Anthony Eisen sees the deal as a future alignment, empowering the next generation under a new model in what he calls a win-win scenario for the consumer and the merchant.
It's hugely significant. On their Cash App side, there's 70 million consumers over the last 12 months that they've engaged with. On the seller side of their equation, they have millions of retailers that they engage with and use their products and services every day. In terms of what Afterpay can benefit from is bringing those two huge networks together. So being able to tap into and draw together this very scalable platform globally, as well as huge advancement in other areas of innovation like consumer investing, consumer saving, etc., is where we see significant opportunity to accelerate the mission that we're on. Our whole approach here was not about a short-term exit. It was about laying up the future. And I think that's completely reflected in the way that this whole transaction came to light.
Now, in the same space, losses at Zip are increasing, closing the year at more than $650 million in the red, as compared with the $20 million loss a year earlier. It comes as the company ups the true cost of its QuadPay acquisition in the States, as well as more than $140 million in new expenses. Revenue, transactions, customer numbers, merchants all higher, with bad and doubtful debts lower on a year earlier. Looking ahead, Zip says it will now acquire all the remaining shares in South African provider Payflex, also signing deals with Stripe, Aiden and FinServe to gain integration to their systems. And shares there off a little over 2% in today's trade. And stay with us, because we'll be speaking live with the co-chief executive and co-founder Peter Gray just off the back of those numbers, so stay with us for that. Now, a bumper first half for Adbri, net profit up nearly 95% on revenue, spiking thanks to robust demand for its products, dividend of 5.5 cents a share, the best payout since 2018. On the outlook, the company is saying second half earnings will be impacted in some regions due to limitations on construction caused by COVID restrictions. And given the uncertainty over the Delta variant, it's difficult to update further on the group's financial outlook at this time. Chief Executive Nick Miller, though, remains relatively optimistic given the company's diverse geographical footprint, but he has called for federal and state governments to have a consistent approach to the lockdowns.
In terms of our West Australia and Northern Territory, South Australia business, it's been really very minor impact in terms of COVID on those, and we have significant demand increases out of the resources sector. On the eastern seaboard, we have had construction pauses in New South Wales, most recently the 2-week pause, and then return to supply with into those construction projects. Importantly, if we look at the business in Victoria, seeing the shutdowns or lockdowns occur there, but having a decrease in our demand as a result of lockdowns because construction. I guess one of the challenges is operating a national business across multiple states, different jurisdictions, different rules. We'd be very keen to see the federal government work closely with the state governments and have a consistent approach to these lockdowns.
Yeah, that's the word from Adbri. Now, WiseTech global shares among the top performers locally, up, currently sitting up 25%. At one stage, they're up 50%, which prompted a trading halt. And that's after a full year revenue surge of 18%, hitting the top end of its forecast range. Shares, as I mentioned, halted earlier on a price query from the ASX after that spike, but have since come back online. The statutory net profit falling a third. However, stripping out one-time items, the number was more than double on a year ago. And Chief Executive Richard White saying the change in patterns of behaviour due to COVID will be permanent, adding he sees global freight increasing once restrictions are eased.
Whilst we will see a return to normality as COVID becomes more of something you have to live with, it is also true that the change in patterns of behaviour is permanent. You know, we're doing things remotely and digitally in a way that we've never done before. We're living in our homes in a much more complete way, and we treat our lives differently because of the way that we've adjusted during COVID. It's basically a retraining of many of the decades-old, maybe century-old behaviours that has now come to pass. And yes, there'll be an adjustment. We'll go back to some of those older ways, but it will never be like it was before. And that means that we're in a goods-led economy, and we've been in a goods-led recovery, which will continue as freight capacity increases.
The view from WiseTech, Richard White there. Now, Seven Group's full-year revenue gaining 6% to $4.83 billion on underlying net profit of $501 million, despite bleeding more than $100 million out of its stake in Beach Energy. Seven's WestTrac and Coates delivered 8% and 5% boosts in financial year earnings, with Chief Executive Ryan Stokes forecasting those businesses to deliver further growth well into fiscal year 22. It has declared a final dividend of 23 cents a share. This as Kerry Stokes steps down as chair, with board member and ex-Coca-Cola Amatil boss Terry Davis named as his replacement. Rival Night Entertainment shares under big pressure in the session, and despite delivering a bumper year of profits on the back of surging digital revenue, Nine Chief Executive Mike Sneesby in his maiden results saying the mix in earnings drivers across its broadcasting, streaming and publishing continues to make a comeback from its COVID lows. A final dividend of 5.5 cents a share. And Medibank has secured about a decade worth of policyholders in just 1 year, as the pandemic drove new members to sign up. Profits up more than 40%, revenue also firming, with the company providing members some $300 million in COVID-related support. The group will pay a dividend of 6.9 cents a share, fully franked. Just some movers of note elsewhere in today's trade. Lovisa shares touching a record peak after net profit doubled on last year. Iluka reporting a 14% pop in half-year profit, benefiting from higher margins on sales of mineral sands as demand bounced back to pre-pandemic levels, and shareholders getting an interim dividend of 12 cents a share. Staying in that mining space, Northern Star Resources shares marching higher after a 300% spike in profit. In fact, it's come off since those were released. It's now down 1%. That's despite a somewhat volatile gold price too, of course. And at the smaller end of town in the gold space, Aurelia Metals shares climbing on a 31% jump in annual profit. Ridley Corp also jumping after restoring its final dividend and rebounding from a loss of a year earlier. And of course, another big day on the corporate calendar expected tomorrow. Of course, here at ausbiz we'll have all the latest with interviews from these company leaders. 9:15, Chris Ashton from Worley. And just after 11, Renato Motta from IOOF. Russell Burke, Life 360. He'll be joining us in the afternoon from around 1, followed up by Alistair Symington, Chief Executive of Blackmores, and Phil Ryan, City Chic at 1:10 and 1:20 respectively. Rounding out the day at 4 p.m, Mike Vaverka, Chief Executive and Founder at Jumbo Interactive.